break it down into three main areas. The first is there was a large client redemption in the quarter, a $52 billion client redemption from one client. I think that spooked investors. Redemptions tend to do that. And that masks some otherwise really good fund flow trends. The second thing I think that also spooked investors, because the entire group is off today, was the higher than expected inflation number, particularly as we're likely to head into a summer where tariffs are going to probably potentially boost that number higher. And, long dated assets and highly correlated assets like those at BlackRock are vulnerable. Stocks are vulnerable to a correction when that happens. And then I think the third factor that drove today's performance was, for lack of a better word, the noise around all of the acquisitions that BlackRock has done. Having said all that, I am still positive on the shares.
It's the world's largest money manager. It's certainly known over the last couple of decades for the growth that it's seen when it comes to ETFs. And that's certainly Emily Grafeo's specialty in her coverage here as a cross-asset reporter. But BlackRock is going through this transformation right now. Private markets, infrastructure. What is its identity? And how has it communicated that to investors?
That's a really good question, because I think some of the shortfall today may have been investors sort of digesting all these changes, and also some of the execution risk inherent in that strategy. I mean, I do like the strategy, and I think BlackRock has these sort of three pillars of growth. One is the ETFs, as you mentioned. The other is their technology business, which is there is a secular shift among a lot of in the asset management space that's driving demand for BlackRock's technology services. And then the third leg to this strategy, which I think, to your point, that perhaps BlackRock needs to perhaps be a little more granular in the strategy, maybe highlight or elevate some of the people driving the strategy, and that is their shift into private assets and alternative assets. I think it's an important shift for BlackRock, and I think it's one that'll offer support to the shares valuation, but I think it's one that has, number one, some execution risk, and number two, is likely to make 2025 a transitional year for the firm.
Talk a little bit more about BlackRock's push here into private markets. Just how critical is it that they get this right? And the earnings that we've seen so far, this report today, did it tell us anything about how successful this push into alternatives has been so far?
Sure. And so, one of the challenges, given BlackRock's size, moving the needle is going to be a challenge. That's number one. I mean, we saw the AUM number, $12.5 trillion. A lot of it is in ETFs or in institutionally managed assets. And so the push to alternatives is likely to take some time. I mean, BlackRock's aspirational goal is to have 30% of revenues coming from technology and alternatives by 2030. It's about, last year, I think it was about 14 or 15%. So, we can sort of hang our hat on that number. I think the other thing to remember is this strategy, and I applaud this strategy. I do think it makes a lot of sense. They have sort of, and I'm going to say cobbled together, and there shouldn't be a negative connotation with that. They've sort of assembled a group of companies and built themselves a pipeline through which they will be able to push more product. And by that, I mean buying global infrastructure partners gives them exposure to infrastructure. HPS gives them exposure to private credit. Those are very important because the demand for both of those assets is expected to continue to grow, particularly among institutional pension funds, life insurance companies. That's a secular shift, and it's an important part of the market. And I applaud the fact that BlackRock is expanding its reach in that area.
I have to get an ETF question in here because, like Tim said, this is part of my focus on the cross-asset team at Bloomberg News. So BlackRock has more total ETF assets than Vanguard. But when it comes to flows, Vanguard has taken in more ETF inflows for the last 5 years than BlackRock. And I'm wondering if you think this is something that keeps Larry Fink up at night, this potential that Vanguard is going to overtake BlackRock in total ETF assets. Is this something that is important to BlackRock? And is it something that you're watching?
Well, I mean, definitely. I think the ETF marketplace represents BlackRock's ETF franchise is an attractive franchise, but I think growth there is going to be a challenge. I mean, the market, they're the leader. I would also point out, though, that BlackRock's lineup of ETFs has a greater representation in some of the faster growing areas. Digital assets and things, alternatives, things like that. So while perhaps overall flows at Vanguard may be more than at BlackRock, they're flowing into some very low fee generating businesses. And one of the strategies at BlackRock is to have a shift to assets that generate a greater revenues, or a higher fee earning assets. So I think the focus at BlackRock is to obviously maintain their dominance in the ETF market space, continue to innovate there, which they have done, but at the same time push into areas where there still is a degree of, let's just say, pricing power on the part of the asset manager.
Hey, just 30 seconds, 20 seconds on its identity. If we think about peers out there, Vanguard's certainly one that Emily thinks a lot about. What about like a Capital Group? What are the other companies that you think are, or maybe an Apollo these days? Like, what is a peer now to BlackRock?
Well, that's interesting because I sort of would put, if you look at, again, I'm an equity analyst, and so my primary focus in terms of valuation is on the other publicly traded asset managers, and it's a very bifurcated group.
Right.
If you look at the way for example, the way S&P classifies the asset management group, on one end of the spectrum in terms of valuation, you have the private equity firms, Blackstone, KKR, and Apollo. Sort of sitting right in the middle of that, you have BlackRock. And then at the other end of the spectrum, BlackRock with, primarily a traditional asset manager shifting. And then at the other end of the spectrum, you have a number of the primarily active managers